Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, here we are, August 21st. Let's talk about the equity markets. And the equity markets, there's a lot of selling pressure that continues in this market. Started last Thursday with a big sell-off. So the important thing is knowing your time frame. And the reason I say that is because short-term, we're pretty cautious right now. However, long-term view is still very bullish. So once you know where you are in that time frame, that'll let you know what you should be doing. So let's talk about why we're cautious. Well, basically we have the NASDAQ and the S&P 500 dip below their 50-day moving averages, and it's just a dip, so it's not a sell signal, but it is a caution signal. Things that are looking a little bit worse are the Russell 2000 Small Cap Index. Pretty much crashed through its 200-day moving average, and that's a bad sign, meaning institutions are dumping. And also, if we take a look at the NASDAQ composite, we see we had about 9 distribution days. Distribution days are days of heavier selling by institutions, and they're clustered together. So that's, again, like kind of a bad short-term signal. Now, the Dow Jones Industrials is just resting right about its 50-day. We're seeing a little bit of recovery in the transports this morning. So short-term, we are cautious, but long-term, we're still bullish because anytime we've had these type of sell-offs, the market has snapped back pretty quickly. Now, of course, it doesn't mean it's going to happen every time. It's to be seen. The problem here is we're entering a little bit what you kind of call a dead zone. All the earnings are done with, so we're going to enter September. We won't get any earnings from companies till October. So the market will probably be driven more by headline news, and there'll be political headline news. Never really good for the market. You see a lot of knee-jerk reactions. But if your long-term view is still bullish, or your long-term time frame, because we're still bullish long-term, is you do want to keep your eye on, and you do want to scoop up stocks on the dip. And also, one of the other things you want to do is make sure you're aware of which stocks are holding up the strongest, which have the strongest relative strength. And specifically right now, we see names, specifically the Chinese names, that continue to perform very well. Names like Baba or Baidu, Weibo, even Facebook's doing very well. Apple's holding up. So you want to keep a list of those names and see how they act, because when the market does turn back up, usually it's those stocks, the strongest stocks, that continue on higher. And so you just want to be able to build a watch list like this. But of course, you always have to let price and volume be your guide. So in summary, short-term cautious, still long-term bullish until something changes. So it depends what your time frame is. That's the way you should be playing this market. So for RCM Wealth Advisors, this is George Kachuk reporting to you from the CME Group trading floor in Chicago. Have a great trading week.